morning. For Traders Exclusive, this is George Tkaczuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. What I'd like to do is talk about the equity markets this morning, and the equity markets are having a very constructive pullback. And what I mean by that is, you need to look at the individual stocks that are pulling back to logical support levels and blasting higher. Even though the index is sold off, if you watch the indexes, you might get scared out of this market. You know, the S&P hit 2,800, sold off. That's the area everyone's looking for. NASDAQ hit 7,500, sold off. That's the area everyone's looking for. Dow hit 26,000, sold off. It looks like, oh boy, maybe this runs over. Well, not really. If you look at the leading growth stocks, they continue to act well. And these are stocks that have gone up about anywhere from 20 to 50%, some 100% since the Christmas Eve day low. And they've pretty much just pulled back to their 20-day moving averages or 50-day moving averages, undercut them, held them, and went higher. Specifically, I'm talking about, again, we come back to the software sector. I know it sounds like a broken record, but those stocks continue to lead this market. If you look at a stock like Twilio, moving higher. Some bad news came in the market last week, undercut its 20-day moving average, immediately bounced back. Stock like Shopify, symbol SHOP, similar thing. Some bad news came in the market, undercut its 20-day moving average, continued higher. Stock like Xilinx, XLNX, same thing, undercut its 20-day, spent some time below their Friday, and this morning it's reclaiming that. Altesian, symbol TEAM, traded back down to the psychological 100 level, bounced off that, recaptured its 20-day and 10-day and moving higher. A stock like Okta sold off after its earnings, dropped probably 10 or 15%, immediately recaptured those levels, undercut its 50-day, reclaimed it, undercut its 20-day moving average, reclaimed it, and moving higher. Stock like Cyber, CYBR, basically undercut its 10-day moving average. Stock like Sienna failed terribly after earnings, undercut its 50-day, however, rebounded and moving higher now. And stock like Trade Desk, TTD, bad news came in the market, traded down to its 20-day, rebounded, and traded higher. Now, these are not trade recommendations, although we did do these trades. We are buying these bounces because there's a good low risk, high reward to these things, meaning if you buy them off these moving averages on these pullbacks and just put your stops right below that, that's a low risk. Your risk is well defined. You know if the trade's not going to work, and the reward, well, who knows? We'll see if the stocks move higher. But the whole point of all this is don't look at the indexes, don't listen to the news telling you about, oh, it's a 10-year bull market, et cetera, or bad jobs number, et cetera, et cetera. Look at the leading stocks, look how they're acting, look how they're bouncing, and that's the place to be. So as always, let price and volume be your guide, but the point is, look at the leading stocks, look how they're acting, and it's a very constructive pullback. So as always, again, let price and volume be your guide. This is George Tkaczuk, we're RCM Wealth Advisors, reporting to you from CME Group trading floor in Chicago. Have a great trading week.